Asian stocks traded mixed on Wednesday, tracking losses on Wall Street as investors weighed weaker than expected economic data as well as fresh tariff comments from US President Donald Trump. Chip stocks fell after Trump said he would unveil new tariffs on semiconductors and chips as soon as next week. Japan's Tokyo Electron and Renesas Electron fell more than 3%. Shares of South Korean memory chip makers also fell, with SK Hynix losing 2%, while Samsung Electronics lost 1.4%. Taiwan's TSMC stocks fell more than 2%. Trump also announced plans to impose tariffs on pharmaceuticals as high as 250%. Meanwhile, US services sector activity unexpectedly flatlined in July. Employment further weakened and input costs climbed by the most in nearly 3 years, underscoring the impact from President Donald Trump's tariff policy. For more on this, we're joined by Jameel Ahmad in Dubai. He's chief analyst at GTC. It's great to have you back with us, Jameel. Now, the US economic activity has been flatlining, as we've seen from recent data. Is this a direct impact of Trump's tariffs?
I would say it's a direct impact of the ongoing uncertainty, because when it comes to tariffs, we've had this uncertainty now as towards where the actual tariff rates stand since the beginning of the year. Roughly when Trump was inaugurated, he threatened to put tariffs in place by early April, and this has now been delayed and delayed and delayed. Now we're starting to see what the actual confirmation of the tariff rate says. So I would say it's the uncertainty that's weighing into the economic data, but we should not doubt that, yes, these tariffs are also having an impact. And if these tariffs remain in place for a prolonged period, then there is going to be a prolonged impact on US economic growth. And the institutions out there have been very clear about warning about this threat for some time. So it's not a surprise to see softening of US economic activity. And it is a trend that we do expect to see continue.
Right now, Trump has announced that he will be unveiling even more tariffs on semiconductors and pharmaceuticals, and markets haven't been taking them too lightly, have they?
They have not, and that's because we're seeing this tariff story now evolve into a different chapter, and the evolution here is that we're now starting to talk about particular sectors and products rather than just tariff rates on particular economies. So it shows that from the Trump administration side, they're in it for the long term. And we're not just talking about technology or semiconductors, we're talking about pharmaceuticals. And it wouldn't surprise any of us if we see other industries and sectors come into this battle over the upcoming period.
Right, and now the question on everyone's mind: how will the Federal Reserve proceed given the weakness in economic activity as well as these steep tariffs?
Well, the US Central Bank has been in wait-and-see mode because, like all of us, they've been waiting to see what actually the tariff rates are going to be. We're starting to see some impact of this, and I do expect for the US Central Bank to be cutting interest rates up to 2 times over the remainder of 2025. The issue here is that, yes, there is validation to the argument that the Fed should be more aggressive, but they can't be more aggressive because they haven't seen what the impact of the tariffs are going to be because of how delayed the story has been so far.
Right, Jameel, we will have to wait and see once those tariffs do kick off. Jameel Ahmad, Chief Analyst at GTC, thank you very much indeed.